What's up, guys? It's Bill Shaw with Takers Brokerage and West Capital.
And this is Sam, the one and only.
The one and only Sam. Sam, what's going on, brother? How are you today?
Good, I'm good. How are you, brother?
I'm good, man. I'm good. Listen, me and Sam, we go back, right? I was his team leader here for a few months, and Sam, you have a lot of experience. Before we begin, kind of give everybody a background about yourself.
Yeah, absolutely. I mean, started in the mortgage a few years ago, started with Rocket Mortgage, did mainly purchase for the most part. And then I switched to property management.
Ooh.
Complete opposite of owning a house.
Yeah.
And did that for a few years, worked on acquisitions as well as like managing properties itself. And then decided to make the switch back to mortgages again, but this time on the brokerage side.
Yeah, that's awesome, man. I'm glad you brought that up because I'm seeing a lot of people right now in that phase of still renting. They want to purchase, they want to move. They just haven't got that urge to do it yet. In fact, I was reading a report the other day. I think they mentioned that the highest, like the average age right now as far as moving and actually buying their first home is anywhere from like 35 and up, which is insane. I was reading that. With you being on both sides of the world, like, what are you seeing right now?
Yeah, I mean, you're not totally wrong. The average age for a first-time home buyer definitely is higher than what it used to be. And as well for a renter, we used to see more people who are 18 years move out for the first time. Now we see, like, I used to see more and more people in like their early 20s, mid 20s move out of their parents' house for the first time to get their first apartment. So definitely the economy affected that whole cycle.
For sure.
Now, one thing I used to tell my clients back when I was doing purchases, and even for like my tenants who were considering purchasing a home, with purchasing a home, even if the payment is slightly higher or as much as what you're currently paying in rent, and even if the interest rate is quote unquote higher, it's still going to be the better option other than renting. Because even at a 7, 8, or even 20% interest rate, which is crazy, it's unheard of, you're still paying less. With rent, you're paying 100% interest. You're never going to see that money again.
Yeah. You know, when it comes down to it, like I'm thinking, and when I talk to a lot of my clients that are kind of in the thought process of purchasing their first home and stuff like that, yes, interest rates matter. But what matters the most is just getting them into the home, right? Getting them into the home, and then it's our job to keep an eye on the market and let them know when is a good time to lower the interest rate, stuff like that. That's one of the huge things that's going on in our economy. I mean, tons, right? But that was one thing I wanted to bring up most because I feel like that's a huge missing opportunity right now. People are just wasting their money away renting versus owning a house.
Yeah.
I know you have a few things on your mind too, man. What's on your mind?
We mentioned taking like purchasing a house when the interest rates are higher. Now, like you said, it is our job to keep an eye on the market and make sure that you're in a better financial position in a year than you were this year.
Yeah.
And that's something we're actually, after the refi boom in 2020 that we're seeing, a lot of people have been stuck in their 2 and 3%. And I get that question a lot from clients who have these very like historically low interest rates, but at the same time, they have crazy amount of credit card debts and loans that they racked up over the years.
Yeah.
And they ask me like, hey, does it make sense to like lower or like refinance and consolidate some debts and get rid of that 2-3% interest rate that I currently have to eliminate those debts? And I always tell them, absolutely, because your blended rate at the end of the day, when you're paying 20-30% on credit cards and personal loans, the effective rate that you're paying is not 2-3%.
Right.
That would be true if you didn't have these other debts. But because you have these other debts, you're paying closer to like 10-15%.
Yeah.
So even consolidating everything into one and taking a higher rate in the 5s or 6s, you're still in a way better financial situation today than you were with the 2 or 3% interest rate.
I agree, man. And I think one thing that people are so stuck on is the interest rates, right? But I mean, let's just be honest. Math is the math, right? If I'm saving you $300, $400 a month, what is that 3% really doing for you? It's not doing anything. It's great to hang up on the wall, but I mean, I know you and I are in the same thought process. We're not in the business of selling interest rates, right? We're in the business of helping people make financial smart decisions. And if you're sitting at a 560 credit and you have all these debts, but you still had that 2% interest rate, what is that 2% interest rate really doing to you?
No, 100%. And the way we like to educate our clients on like what's the financial savvy way to do certain things, I personally learned a lot from my clients who are like investors or financially savvy themselves. A lot of those clients, what they're doing is they're leveraging equity they have in their properties, whether it's like a primary residence or an investment home, to invest in other things, whether it's real estate, the stock market, or like purchasing a business. Because historic average return, for example, let's take the S&P 500, 10% return per year. So if you take equity out of your home at a 6% and you invest it into the stock market with the S&P 500, like you're making 4% return on your money minimum just by having it parked from your equity in the S&P 500. A lot of clients are leveraging that. Well, what do you think? What's your thought on that?
That's a smart way. I mean, if you think about it, it just kind of goes back to, you know, the safest investment, right? Or the safest thing to do is to not focus on the mortgage interest rates and just leverage that, because that's going to be the lowest kind of interest rates that are out there right now, right? And even if you're sitting at a 3% interest rate and it doesn't make sense to refinance, there's other options out there, right? One of Sam's favorite products is the home equity line, man. I mean, you're the king of that. Tell us more about one way that you would bring a client into the home equity world and the benefits behind that.
I love the lines of credits or second mortgages because it gets you to preserve your low interest rate if it made sense for you. So a lot of times clients are looking to do home improvements, or they're looking to consolidate a small amount of debt is not big compared to the main mortgage balance. So in that case, it would make more sense to like keep that first mortgage intact and then leverage the remaining of the equity to do those home improvements or the consolidate some debts. And a lot of my clients too will leverage that. They don't necessarily need to use it right now because it's just like a credit card. You're only paying on what you're using. So a lot of them will just take it out, pay it back so they don't owe anything and don't have any monthly payments, and have it there as like a safety net in case of an emergency or in case of like an investment opportunity rising up and they need like money fast. They have access to it. They don't have to worry about like qualifying down the line or worrying about none of that.
I think if you're a homeowner and you don't have a home equity line open, it's a huge loss for you, or huge opportunity that you're missing on, because it's really equity that's available to you at your disposal, but you don't have to use it if you don't want to. It's one of the safest things to do is to get a home equity line. Because I mean, at the end of the day, like, let's say you are looking to consolidate these 15, 20, 30% interest rates. With a home equity line, I mean, you're still going to get a phenomenal interest rate that's fixed. You don't have to worry about that adjusting. Again, we don't sell on interest rates. We sell on savings. We sell on what makes sense for the client. And that's why you can just rely on us being experts. But what else is on your mind, man? I know there's a lot of stuff going on right now in the economy. From what I can see and the people that I'm talking to, people are struggling, right? And totally trust me, like, I'm human, man. We're not AI robots, right? We're live human beings, and everybody's struggling right now, right? And that's okay.
No,
it's okay. What's important for people to understand is they have a tremendous amount of opportunities available to them by using the equity in the home. And if you don't use it, I mean, you're going to lose it, right? And that's what we're seeing across some of the states around the country, Florida, Georgia, even Pennsylvania. I'm showing a lot of home values still at all-time high, but they're creeping down a little bit. They're correcting itself. So what do you think?
100%. Like you said, it's okay if in a not financially ideal position, But what's not okay is to not do anything about it and still be stuck there. I talk to a lot of clients. If that was your neighbor, you would think this person has figured out life. Like they have the car, they have the house, they go on trip, like they show you even their W-2 at the end of the year. It's like mid six figures.
Yeah.
You would think this person is like a big baller.
Yeah.
And then you take a deeper look into their financial situation. A lot of these people are living paycheck to paycheck, like they're making minimum wage. Like they have no breathing room. They're like in debt up to their neck with credit cards, personal loans, auto loans. And they have equity to consolidate that and leverage the equity they have in their home to not live paycheck to paycheck anymore. And that's what I see, like most of the clients that I'm working with, this is what we're resolving for them and helping them keep the majority of their hard-earned money that they're working hard for to keep it, instead of just paying it to X, Y, and Z company to cover their credit cards.
It all comes down to two-step process, right? And this is something I talk about constantly with you and other people around the office, is when you're looking at the mortgage that you're going to be going into, or the mortgage that you're in right now, you have to look at it as a two-step process, right? The first step is to consolidate your debts that you have out there, save you some money monthly, put money back into your pockets, right? And when by consolidating the debts and you pay these debts off, I mean, you're going to see your scores just skyrocket. Over 6 months, right? 100%. And in 6 months, we always do a mortgage review with all of our clients at 6 months down the road. And 9 times out of 10, I mean, the market gets better, your credit gets better, it's a better financial picture. You know, chances are you'll be in a better position 6 months down the road.
Yeah, and I've experienced that with a client like recently. One of the first client I started working with when I joined West Capital, we were able to leverage a line of credit for them to do some home improvements and consolidate some debts. And now they're in the process of turning their original primary home into investment home, and their credit score improved. So now they're able to purchase a new house, which we're getting done for them.
That's awesome.
So I've seen people's lives change, and that person is not making 6 figures. That person is not making crazy amount of money to buy a Lamborghini or anything like that. He's a hardworking American, goes to his 9 to 5, puts in his hours, and goes home and spend time with his family. That was able to do that. You don't need to work 2-3 jobs to be able to accomplish that. It's all about leveraging the tools you have around you without having to put more time into working or generating more income to fix what you currently have, just by restructuring what you currently have.
I agree, man. Couldn't say it better. And, you know, another thing is too, is like when you talk with a lot of clients, I'm sure you see this, right? People could on the phones, you know, I'm just looking to get money out to buy a car, right? Or something in that nature. If you look at the consumer interest rates on these vehicle loans, I mean, you're looking at 10, 15, 20%. It's way smarter to look at the opposite side and look at like a safer investment with getting a home equity line or taking cash out of the equity. You're going to get a lower interest rate.
Yeah, absolutely.
Absolutely. What else is on your mind?
What do you think of the market in general, today's market? Like, we hear a lot of people in our industry say, oh, the market is this, the market that, the leads are this, the leads are that. Like, I haven't wrote a deal in or had one funding or one closing in the whole month. Like, what do you think about that? And do you think they're...
So I mean, that's kind of like a 2 question, right? What I think about the economy right now, when I think about the market, I mean, it is what it is, right? I think that historically, it's still not a bad market to be in, right? If you looked at the market during COVID, 2020, 2021, 2022, everybody thought we were in a fantastic market because interest rates were so low. But if you look at the flip side of it, the Dow, your stocks, everything was super low with that, right? Now we're in a position where the stock market and the Dow is at all-time high, right? And we're seeing interest rates kind of creep up, right? It's part of how it goes, right? It needed to be correct. And I still think there's a major opportunity for us to take advantage of the market and help people out. As far as my prediction, listen, I wish we all have an 8 ball to rub, right? But I think probably 6 months to a year, we'd probably see a little bit of a drop in the interest rates. But I think that the way the Fed is and the way the market's handling, I think they're making their correct adjustments to kind of decrease inflation and whatnot. Now, going back to your second question, like if I was a loan officer, right?
Oh, it's the leads. Oh, the market's not in a good spot. Oh, interest rates are too high.
You're just looking at like surface level stuff, right? You're not getting into the weeds. You're not digging into your client's financial situation, your client's goals to uncover the real need. Because the real need is not about interest rates, right?
Yeah.
The real needs is the monthly savings. And again, going back to my point, I don't care if you have a 2%, 3%, 4%, right? If I'm able to save you $300, $400, $500 a month, the interest rate doesn't matter. It doesn't.
Yeah.
So yeah, that's where my thoughts are. Loan officers, if you're struggling right now, and if you're only focusing on interest rates and the surface level stuff, I challenge you to spend a little bit more time with your clients, dig deep, and get into your financial goals, because there's a lot of opportunity out there and there's a lot of people struggling. So that's what's on my mind.
Totally agree. And glad you mentioned that, because like I want to get less professional and say this. COVID interest rates ruined you. All right. The expectation that COVID interest rates has created for clients is unrealistic. Before COVID, we did not see interest rates in the 2 and 3%. Right before COVID, they were around where they're at right now.
Yeah, like 5%.
Yeah.
Hovering.
And historic average, we're looking at 9 to 10%. So even the 7 or 6% that you're not happy with because it doesn't give you bragging rights, that's still historically lower compared to like the average. Sometimes I feel like a lot of people, they just want to get that 2, 3% to give them that bragging right to tell their cousin or relatives or friends like, oh, I got this deal. But like that doesn't serve anyone.
Yeah. And to be honest with you, it's no fault to the client, right? It's just everywhere around them. Right? Like if you look at the headlines, right? If you talk to people that have, mortgages back in 2020 and stuff like that, they're putting it in people's mind today that you shouldn't look at refinancing or you shouldn't look at purchasing because interest rates are historically high. That's totally false. So I'm glad you brought that up because I think it needed to be said.
Yeah. I mean, we saw a surge in first-time home buyers during COVID, and then that set them up to like create an internal belief that if interest rates are not around that range, that means like we're in a bad market or we're in a bad spot. But the 2-3% are the exception, not the rule. Like you can't expect everyone to drive a Lamborghini and a Ferrari. Someone has to drive the Toyotas and the Camrys. Does that make sense?
It does. It does. I'm kind of going back to what you were saying back in 2020. What you've seen when interest rates were like that is, people are getting outbidded when they're looking at buying homes, right? And it kind of brought up the housing bubble as far as, values were way high, right?
Yeah.
So now we're in the market right now where there's less competition, right? So again, don't look at the interest rates to be a bad thing. It's just temporary to get you into the home itself. And honestly, man, for like first-time home buyers and just buyers in general, for me, a higher interest rate makes a lot of sense because it's less money coming out of your pocket, right? Let the professionals worry about the interest rates when that time comes. That's what I would say.
Yeah, absolutely. Especially if you're looking to buy a house in this market, right now is the best time to leverage seller concessions, which could go towards your closing cost, that can go towards buying down the rate, if that's like a huge concern for you. You were not seeing a lot of seller concessions back in 2020 or when the interest rate eventually dropped down. You won't see a lot of seller concessions because more people are going to be borrowing money to buy houses. The seller has and like, why would a seller give you any concessions if he already has like 5 different offers and some of them might be over asking? So like you said before, date the rate, marry the house, find the house you want, find the house where you see yourself building a family and growing old, find the house that you would enjoy going back to.
Yeah.
And you get it at a discount today. And when the interest rate drop, you just drop your rate.
100%. And I think when it comes down to is if you are in the market to start looking at homes or just doing your research up front, it's important to talk with a professional, right? Somebody that's been doing this for 10 plus years, somebody that has access to, the lowest interest rates on the market and the different lenders that we partner with. There's a lot of opportunity out there. So my biggest suggestion for people that are in that, time of their lives in that market is to make sure that you reach out to a true professional like yourself. And, I know that you'll take good care of them as well.
Absolutely. If you're considering purchasing a home anytime soon, whether it's in 3 months or in a year and a half, reach out to us, reach out to a professional. We'll help you understand what you need. Even if you don't have money saved up to purchase a home, we'll let you know how much you would need to do so. Even if your credit is not in the best shape, we'll help you get your credit where it needs to be for when the time comes to start looking at houses. You don't want to wait until last minute to do so. So reach out to us now so we can assist you with that. So when the time comes, you're ready to pull the trigger.
Yeah, absolutely. Because maybe right now is not the best time for somebody to purchase a home. And if it's not, we'll be the first one to tell them, right? But Absolutely. At the end of the day, we just have to set up a game plan for them to get them to that point where they can afford that. But
Absolutely.
At the end of the day, Sam, you're doing great things, right, with the company. One of the top loan officers in the retail team. Very proud of you for what you're doing, what you're accomplishing, and just continue to do what you're doing right now and helping your clients out. But as always, guys, if you guys have any questions, concerns, if you want us to run the numbers for you and your family to see if it makes sense for you, all you have to do is simply reach out to us directly. Be happy to help you out. Again, my name is Bill Shaw, branch manager with West Capital.
And the one and only Sam Hervey
with West Capital. If you guys have any questions, let me know. Thanks for listening.